Have you ever heard of Stan Weinstein and stage analysis but not really got it? I'm going to give you two incredibly simple examples from the real world. Instead of just drawings in books or whatnot, some actual stocks. The codes themselves are irrelevant, just clear examples so you can understand what the hell stage analysis is. First of all, Weinstein liked to use a 30-week moving average. So I'll just put that on the chart. He used a simple 30-week moving average. Let's just put that on. Now, this is a stock on the ASX called STP. This is a stage one base down here. See how the price obviously falls and collapses, and then it forms this sideways base. This is really a textbook perfect example because it goes sideways. The lows get higher and higher and higher throughout that base. The resistance is flat, like you just have a flat resistance line. But then on the right hand side here, you have like 7 weeks of just incredibly tight price action. This is always on a weekly chart, by the way. Then when it breaks out, if you see here the volume, you have about volume expanding by about 300 to 400% on the weekly chart, and the stage 2 uptrend commences. So this is where you want to be buying when the stage 1 base is breaking out. The second it's breaking out right here, okay? Then this uptrend starts. Then you get continuation patterns within the stage 2 uptrend. So you can see here this symmetrical triangle that happened and it kind of contracted and had 1, 2, 3, 4, about 4 to 5 weeks of basing and tightening. And then it exploded out of that continuation pattern and kept going up. Then up here, you start getting a looser base. See how this base is so much looser than this base? And this tends to happen when a little bit of distribution's going on, a little bit or a lot of distribution's going on. And so you've had this huge move. People are taking profits. The smart money's getting out. They're starting to distribute their stock. And other people are, waiting for a breakout. But this one never actually broke out. It had a lot of distribution, a bit of looseness, and then it broke down this trend line here. And then you go into what's called a stage 4 decline. This thing's now gone from like nearly $2 down to like 20 cents. It's in up shit creek, this thing, right? It's in some serious shit, okay? Now, that is the basic, theory behind stage analysis. Stage 1 is when all the smart people, the smart money, you accumulate in stock. When they test these lows, they're accumulating. You can see little bits of volume spikes when they're accumulating. They're just sitting back, accumulating, okay? And then eventually it's ripe and it goes up. It's a bit like if you're building a massive house or a massive building compared to a tiny, shitty little tin shack. The massive building needs massive foundations, doesn't it? Whereas a little tin shack doesn't really need any foundations. The same thing with stocks and big price moves. They need big bases, they need big foundations. It's the same theory. The bigger the base, the bigger the move. All right, now that is that. There's one other example quickly, and I want to move on to one of the most famous companies in the world, Tesla, weekly chart. Now, because some stocks that just keep winning and winning, they look a bit different, and I think that classical stage analysis needs to be changed a little bit. So I'm not going to go through this in as much details because I explain like a lot of the fundamentals and the reasoning and the psychology behind it in the last stock. But I just want to show that stage 4 declines don't always look like they did in the textbook and they did in that last chart. For example, Tesla floats back here, has this huge stage 1 base, okay, where it goes sideways, from floating date really till it breaks out like 3 years, okay. Then it breaks out after 3 years, okay. I remember back here, everyone was hating on Tesla. I thought it was shit, It's like, it was never going to be anything. They had debt, they had, all these problems. They were never going to take on Detroit, all that crap, okay. And then it breaks out and then just goes crazy uptrend, okay. Then you get this toppy kind of action, breaks out, but doesn't do anything, it just toppy, and then see how it never really has a stage 4 decline, right? It just stays in stage 3 for like, 2014 to 2019. We're talking 5 years of stage 3, okay? And so at some stage 3 turns into a new stage 1, and you just don't get that stage 4 decline. You could argue that this here was a stage 4 decline or that was a stage 4 decline. It's kind of irrelevant because the thing is, this just thing goes sideways for like 4 to 5 years, right? Then starts breaking out again, all right? So now you know that that stage 3 was probably a stage 1, and then it breaks out, forms a new stage 2 advance, all right? This is this COVID blip, okay? I remember it. It was violent at the time, but now you look back and it's just a tiny little blip, isn't it? Anyway, you get this new stage 2 advance, and now where are we at? Is this stage 3? Is this top in? Or is stage 3 going to turn into another stage 1? All right. No one knows. The jury's out. Okay, it'd be very interesting. But I do know that this has been going sideways really for a long time. And if we get sideways action on and on going, and then it tightens up and starts taking out these old highs, I mean, it looks like history will be repeating, okay? If it goes into a stage 4 decline, I don't care. Good for it. I'm not going to be in it. The only way I'm going to be in it is if it tightens up and gives me a great signal to get in. It's as simple as that. That is Stan Weinstein Stage Analysis. He would write it with a 30-week moving average. He would have wide stops. So he's not riding this with like a 10 exponential or 21 exponential moving average. He is riding it with like a 30-week, 20-week moving average. He's using big major support breaks. Still, it's not easy staying in these things. The hardest thing of being in big moves, it's just getting whipped out. Like during COVID, for example, most people got whipped out. But then there's all these tiny whips. Like this is a weekly chart, so it's hiding a lot of them. But the daily volatility is massive. If you want to stay in something and have a chance at like 5x or 10x your cash, like this move was from 26. This is adjusted to splits, obviously, but up to 292. If you want to have a crack to get in and ride that, you're going to need to have some massive pullbacks, which means you're going to have your paper profits evaporate in front of your eyes, okay, and have what it takes to just sit on it and believe in it and wait for it to come back, okay. The other option is you could trade and get in and out, and try and time it. Very, very hard to do. Some people can do it, some people can't, but that's not the point of this talk. The point of this talk was to just give a rundown on stage analysis. That's been done. Hit us up if there's any questions. Get in our trading room, do some scans, get amongst it. ProTraderscans.com. Cheers.